Good morning. We will pay attention to the financial statements of a sole trader today. From time to time, a businessman has to consider all the factors that may affect the financial position for the period. That means in comparison of the assets to the equity and liabilities. So all your balances of your assets, equity, and liabilities are taken into account to determine what is the financial position of the business. And the financial performance is where the income and expenses are taken into account to determine if you made a profit or a loss. So the financial position, to determine that, you will record the entries in the balance sheet. To determine the financial performance, everything will be recorded in the income statement. The statement of profit or loss and other comprehensive income or income statement will be drawn up at the end of the financial year. The purpose of this income statement is to show the financial performance. That means whether they made a profit or a loss. So you will record all your income and expenditure for this period, and you will determine after you deducted the expenses from the income whether you made a profit or loss. The income and expenses that you show in the income statement must be the total amount for the year. That is the amount that it should be if there was no prepaid or no accrued amounts. So you must always determine the total expense that will go to the income statement. If everything was not paid, the portion that was not paid will go to the balance sheet as a liability. The statement of financial position or your balance sheet will disclose the value of all your assets, liabilities, and equity on the last day of the financial year. That means we show the financial position between assets on the one side and liabilities and equity on the other side. Adjustments are made at the end of the year. So during the year, we will record all our entries in the subsidiary journals. From the journals, we will post to the ledger accounts, draw up a trial balance. Then at the end of the year, after we've completed this monthly position in the trial balance, we will have to do some adjustments because some of the entries were not completed in time, or some of the entries were omitted, or you made mistakes. So one of the adjustments that's made at the end of the year is to correct mistakes. So if you see that your trial balance doesn't balance, you have to go and look for the mistake so that you can correct it. Or sometimes the auditor will point out to you that certain entries were not correctly recorded, so you have to go and correct them. You have to do transactions that were too late to be done. So it means you closed your books at the end of the month and then you still didn't record all the entries. For instance, you will only receive your water and electricity account on the 4th or the 5th of March, but the end of the financial year is 28 February. But that for water and electricity is still part of the current financial year, so you have to show it as part of the financial year, and you will show that it's an accrued expense because you still have to pay it. You have to record normal year-end transactions that you don't record normally during the year. That is, for instance, depreciation on our fixed assets is determined at the end of the financial year, and you will provide for bad debts for the future, money that is possible to be lost. The nominal accounts have to be adjusted by way of journal entries in the general journal so that we can present the accurate figures for income and expenses in our current financial year in our income statement to determine what is the profit that we made for the year. Any accumulated income received in advance, prepaid expenses, accrued expenses must be recognized as current assets, while accrued expenses and income received in advance must be recognized as current liabilities.